When people try to manipulate decisions by padding things or changing things, or keeping the balloon going, eventually that balloon pops. And when it pops, because it's not strong, it comes down crashing harder. So I just urge everyone on a micro level to make every decision as soundly as possible, and to invest in your circle, invest in people around you, because they're going to by default invest in you then, and therefore you'll be able to make more sound decisions.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Dan Lewkowicz is a seasoned real estate veteran with over 15 years of experience in many facets of the real estate industry. And if you guys recall, who are faithful listeners of this show, he came on the show back on January 30th for episode number 62, where we spent quite a bit of time digging into triple net leases, how value can be found in triple net leases, net lease investments, national tenants. We learned all about triple net leases there on that episode. And again, that was on January 30th, episode number 62. And I'm pleased to have him back on the show again today. We're really not going to spend a lot of time talking about triple net stuff, but really some more fascinating things that are going on in Dan's business world, how 2021 has treated him. Maybe we'll slightly touch about triple net and just see what the state of the market is. But really pleased to have Dan back on the show again today. Dan Lewkowicz, welcome to the show.
Hey, thank you so much for having me. It's always a pleasure to connect and interact with you. And it is hard to believe the last time we were on a show together was almost a year ago.
Right. Yeah, absolutely. That show went live the 30th, which means we probably recorded it sometime early December. So that's, we're fast, which is wild that 2021 is almost over. We're fast approaching, a year since we've chatted. So, hey, I'm looking forward to jumping in today. I mean, again, we've got the kind of background on triple net from you on that episode. Would love really to hear what it is you're doing in the industry right now, where you see opportunity personally, maybe not necessarily when you're repping for tenants or for buyers, but where are you and what are you doing?
Yeah, so great question. I kind of ask myself that every morning and every evening. I've been all around the country the last few weeks, just made it back here into Detroit on Sunday night. So really what we're doing is a variety of things. So first of all, the Lewkowicz Group at Encore Real Estate Investment Services has expanded quite a bit. Got some amazing new hires. Shlomo Aaron is working with us, Herman Braun, Carolina, Ellie, Cindy. We've got just a whole great group now that's really enabled us to step it up and leverage our time and actually, quite frankly, leverage our business. So that's been super exciting. Some major mega listings. Just listed a $47 million resort offering in Traverse City, Michigan. We actually have that under contract. I'm doing some development in the area as well. A lot of dollar stores all across the country. Many more medical office buildings we've been working on specifically for some major tenants like Mercy One. Sold a lot of fast food, probably eight or nine fast food restaurants this year alone. And really getting more into the syndication development space. I've got some great opportunities here in my home area. This is actually a new home here in Birmingham, Michigan. Got an incredible redevelopment of retail over on Woodward. Woodward is the M1 corridor. It's probably my favorite corridor in the nation. It's actually a little known fact, the first America, the area where our development sees over 120,000 vehicles per day. So, really excited about those developments and a lot of the stuff going on in the Lewkowicz Group at Encore. Also, the CRE Pro course has absolutely exploded. We've got a huge following. A lot of people have been through the course and it's changed their lives. We've actually have a mentorship program and a mastermind. And quite frankly, the people that get through all of those levels end up working together with us in the brokerage world. So, life is great, man. I really can't complain about anything.
Man, that's a lot of moving parts and pieces. I'm not sure how you sleep at night, but, aside from that, talk to us about the CRE Pro course. What is that?
Sure. The CRE Pro course it's actually a suite of services, and it's the soup to nuts, the A to Z for everything you need to know to become a top commercial real estate broker or investor. So this course was created based on 15 years in the industry for me and probably about the same for my partner, Zach Rasinger. What we did was we put together basically, an interactive all-in-one course. It's on demand. You can see it at our website at CRE Pro Course. That's creprocourse.com. And it's a 90-day program. You have access for 90 days. There's 25 modules, and it includes all of the PDFs, the spreadsheets, the call scripts, the databasing tips and techniques, the agreements, the different contracts, everything you need to look at and learn to become a top commercial real estate investor or broker. We go through everything from cold calling to databasing to utilizing LinkedIn and leveraging it for commercial real estate brokerage and investing. We help people build their own communities, their own businesses. And that's really the basis of everything that we do at CRE Pro. Now, we also have a mentorship program that enables students to have one-on-one mentorship with someone like myself, where we speak every week for an hour, either on Zoom or over the phone. We go through your actual deals. We help you build your team, help you grow. Now, we actually have a mastermind launching next week. We still have like 1 or 2 spots left in that. And that's actually a real live deal room. So that's a 13-week program, once a week with a group of a maximum of 10 people, with myself and a guest speaker. And then once every other week, 30-minute one-on-one Zoom with each person. So that program is actually designed for people to bring real live deals. If you don't have a real live deal by week 7 in the course, in the mastermind, I should say, I'm going to personally kick you out. So it's really designed to do deals together and to learn how to be a commercial real estate investor.
Wow. I love the, what is it? Not the threat of kicking you out, but
it's a threat. It's a
threat, but it's not a threat. It's
an accountability.
It's an accountability, and it's also the confidence you have that if someone does what you say, then they'll have a deal under contract or at least in the works by week 7. So it's I wouldn't a threat is that's different. It is confidence in what it is that you're producing.
Sure.
That if you're resting on your laurels, then you don't need to be in here because you're just not doing what you're supposed to do. So the fault is yours. I think that's fascinating. What was that like developing that course? That sounds like a nauseating and difficult undertaking.
No, I would say it wasn't. I mean, I would say when people try to manipulate decisions by padding things or changing things or keeping the balloon going, eventually that balloon pops. And when it pops, we really strong, it comes down crashing harder. I know you are. So I just urge everyone on a micro level to make every decision as soundly as possible. And if you want to invest in your business circle, invest in people around you, because they're going to by default invest in you then, and therefore you'll be able to make more sound decisions. They're not just mine. They're mine. They're my friends. They're my family members, they're my colleagues, they're the people that I do deals with on a regular basis. So really what happened, it's like what happens with all these projects I put together is, the idea was around, people had wanted it for a while. I just needed to sit down and put pen to paper. So what I really did was I sat down there and I said, well, if I was brand new and I could get everything in 13 weeks, what would it look like? So I walked through the whole process, right? So how do I source a tenant? How do I decide what type of asset I want to work with, right? How do I then go ahead and find potential assets that might be good for my investing or syndication or brokerage? Okay, let me make a process for that. This is the process that I use and my friends use. Okay, well, what do I do at that point when I need to analyze the deals? Do I have like a smash or pass, swipe left, swipe right system to be able to get the clutter out and say, this is potentially a deal, this is definitely not a deal? And then at that point, how do I analyze and underwrite every aspect of the deal? Now, well, how do I raise capital? How do I network? How do I market? How do I go through due diligence? How do I, make sure that escrow and title are working right? How do I then go close the deal, remarket, rebrand, put it back out to the masses? So it just took sitting down and putting on a rubric, the processes that we've been refining over the last few decades.
Right. That's fantastic. I love that. And what was the confidence when you said, okay, like, you guys have a successful triple net lease, or net lease buying and selling company. You guys have done great on that front. What was your confidence that what you were producing was even desired by the market?
Well, it was because the market had reached out to us. I mean, we created the course because people wanted it. They were reaching out. I was having 3 or 4 calls a week where people were saying, hey, Dan, teach me how to get into brokerage. Hey, Dan, teach me how to get into investing. So that's why we made the course. The mastermind, I was speaking at, actually, quite frankly, it was these real live events. For a year or two, most of the stuff we've been doing was over Zoom. I started getting invited again to speak in person. And people were like, hey, Dan, if I bring you a deal, will you help me? And I was like, yeah, of course. Sure. And then another person was like, hey, Dan, I've got a deal. Can we do something? And I was like, yeah, of course. And then I thought about it. And my students were like, Dan, we love doing brokerage. We love doing what you've taught us. We want to take it to the next level. Will you help us? So really, that's where it wasn't even confidence. I would say it was necessity. Like people wanted this thing. And quite frankly, I have to give back because over the years, I've learned and gained so much from, my mentors and my teachers. And had they not included me in their deals, I wouldn't be here today. So therefore, I've created this to help other people to be included in each other's deals so we can all take it to the next level.
Right. That's fantastic. I love that. And there's the giver's gain, of course, inside of that as well. That
no doubt.
Yeah, that's fantastic. Talk to us about some of the asset classes you guys are venturing into. I mean, a listing for a $47 million resort doesn't sound a whole lot like a fast food restaurant.
It doesn't, but it is. And I'll tell you exactly why. I'm glad you said it like that. So the systems that we teach in the course in the mastermind are the exact systems that were used for me to get a Wendy's restaurant here in Michigan. I don't know, maybe 6 months ago. Got the property, put together a proposal, got the listing, 11 offers in the first couple days, double-ended it, did a great job for the client, right? Client and I become close. Still to this day, we haven't met in person, but I love him. We talk almost every day. And, as time went on over the last couple months, he told me about another deal. And, I started to get a feel for just the size of this client. And I started to get to know him. So eventually, I was actually recording my show maybe 3 months ago. And I got out of the show and I saw 2 missed calls. And I was like, okay, that's interesting. 2 missed calls from the same guy. I picked up the phone, called him back. I said, hey, Mr. Client. I didn't even say, hi, hey, Mr. Client. I picked up the phone. I said, what do you want to sell? And he started laughing. He goes, how do you know I want to sell something? I said, because you called me twice in 1 hour. Okay, you don't do that. It means you want to sell something. He started laughing. He goes, yeah, we want to sell the resorts. And I said, okay, tell me more. He said, I don't want to give away too much information, but he basically told me that him and his family had just, disposed of 6 other properties, and they did that privately. They've never sold anything on market before except the deal I did, which was unbelievable. I couldn't believe that.
Wow.
And then they said to me, we want, you to let us know what this is worth. And, I have background in that. I mean, obviously I'm a broker, I'm an investor. I've done deals like this, never anything that was exactly like this. And that's the beauty of commercial real estate, is that every day is a learning experience. So put together a proposal, networked with my team, brought in, quite frankly, some of my friends and colleagues to help me underwrite. And eventually, we came up with something that made sense for everybody. We brought it to market and just, hit a grand slam. So, they are different, but they're very similar, because that fast food restaurant that came from the same techniques is what led me to the largest listing of my life. And it's what's going to lead me to an incredible development on the sugar sand beaches of Lake Michigan.
Talk to us about that. When you say incredible development in the sugar sand beaches of Lake Michigan, what are you building?
So we've got actually an opportunity coming up with 93 feet of sugar sand beach on Grand Traverse Bay in Lake Michigan, literally like right here. I don't know if that's the right way for you guys, but whatever. So literally right there on Lake Michigan. And it's about 1.02, 1.03 acres. So the thought right now is that we'll have a synergy between the existing resorts and then what we will build in that vacant parcel. So the 2 potential directions would be as follows. Number 1 would be 8 bay view, bayfront, lakefront villas, right? Approximately 2,200 square feet. Actually working on, I got one of my guys in the Lewkowicz group underwriting it as we speak. 2,200 square feet each, right? So 8 of them, 2, 2, 2, 2, with an elevator in the center. And then behind them, this is kind of my idea. As we were talking before, I'm really into cars. In fact, I'm in this new home and I've got the top to one of my Vipers over there in my office. So I believe that storage is the name of the game. And I know you agree with me for people, in this era. So what we're going to do is we're going to build 8 garages behind that development closer to the road that Tesla will sponsor. They already sponsored next door. They'll have solar, they'll be heated, cooled, charging stations, humidified, dehumidified, whatever's necessary. And then above them will be studio offices / hangout spaces. So that's option number 1. Now that could go a rental way, right? I could hold the whole portfolio and rent each of those out. Now keep in mind, those will rent out anywhere from $1,200 to $1,500 per night,
right,
per door or per unit, right? So that'd be option number 1. Option number 2 would be potentially to sell them off individually. And then that's kind of like in the major first option, I should say. The other direction would be go more mixed use, right? So maybe 5 to 7 villas with a restaurant or bar on the ground floor, some kind of retail, maybe conference space, and then really synergize with the rest of the properties we're involved in on Traverse City Bay. So that's the deal. And I'm literally right now putting all the numbers together. We're going to close by year end on everything. And I'm open to partnerships. I'm open to talking to people about things. It's just going to be a really exciting project.
That's fun. I mean, that's the creative part, I think, of real estate that people miss out on, or, they think it's all just value add, bought an apartment, increased rents, blah, blah. Then we sold it. But this is the fun stuff It's like, gosh,
No doubt.
we can take this. How many, creativity is not limited to just the arts. So, you could take this 100 different ways. How are you going to solidify the plan in order to get it closed and of course get financing on it? What will be the final, this is what we anticipate this becoming? How will you get to that?
Well, probably there are a lot of variables. Number one is going to be the city. Parking is going to be a constraint. If I wanted to do a lot of retail, I probably can't, right? So that's going to be something that we're doing right now and figuring out as we speak. Now, the way I look at it is like, this could go one of a few ways. Number one, we could do a construction perm loan, which for anybody who doesn't know, that's where essentially I come, I say, hey, my name's Dan. I've got this land. We're going to be closing on it in December. Hey, Mr. and Mrs. Bank, how about you lend us to purchase the land, right? And then we'll put a certain amount down. And at that point, every time there's a draw, every time there's a milestone, let's say we grade the site, or we pour the foundation, or we put the sticks in or the bricks in, or we put in the HVAC, if there is going to be any. That's a little hint, right? And then, or at least unconventional ways. But and then at that point, we get another draw and another draw. And what I really love about this is every milestone we have built-in equity, because we're doing things. This is what I love doing. I love doing things, adding value to things, and we're doing things that are undervalued right now. So doing it that way, I think, may be preferable, because we'll be creating something utilizing, incredible financing terms that's going to be worth a whole heck of a lot more stabilized than we have into it, or than the lender will have into it. So that's one way. The other way would be to do this in a private capacity, where I'd get together maybe some close friends or family members, and we would all go in. Maybe we'd even pre-sell some of the villas. Maybe we'd do it all ourselves and hold it. But I'm not exactly sure which direction. That to me is the biggest question mark. It will be done. It's more of a question of, is this going to be a private deal, or is this going to be a deal that's utilizing primarily conventional financing?
Right. Oh, that's fascinating. That's tons of fun. Talk to us then. Yeah. Let's transition from that, and then maybe talk about dollar stores. You said a lot of dollar stores are trading.
Yeah, I got one just yesterday. We have one interesting roof inspection situation. I've got probably 6 on market right now, and discount retailers and dollar stores, we've seen nothing but cap rate compression on those assets. And I mean, going back far, but especially over the last 2 years in this pandemic era, it's very interesting that the major dollar stores like Dollar General, for example, opened 1,000 stores this year, 600 last year. The developers can't build them fast enough. We see that this is always an asset class. I'm an individual. I have a background as an Amazon business development executive, so my eye is always attuned to e-commerce and recession resistant tenants or e-commerce proof tenants. Well, dollar stores traditionally are relatively resistant to e-commerce for a variety of reasons. Number one is that their products are typically very cheap, right? Hence the name dollar store. And many products in that dollar range doesn't make sense to buy them online because of the freight costs and the shipping. Number one. Number two, they're typically in secondary or tertiary markets. Now, you obviously do have dollar stores in primary markets, but many of them are in secondary and tertiary markets where there really is not any other or much at all, in terms of retail competition. So it's a fascinating asset class. It's different than a lot of net lease deals. It's also very attractive. And right now, we're seeing, give an example, like we're seeing dollar stores trading in the 5.5, 6 cap, some of them higher, depending on whether they're double or triple net or how long. But, these are the same assets that were trading in the 6.25, 6.5, 7 cap and higher only 18 months ago.
Wow. And I mean, I would assume stores like Dollar General, those are all corporate owned, correct? Or are those individually held franchises?
Yeah. So the 3 main players in that space in general are Dollar Tree, Dollar General, and Family Dollar. I happen to love Dollar General. They've just got better credit. They're a bigger corporation. Family Dollar is good as well. Dollar Tree is good as well. They're different, but these are going to be corporate stores that have corporate guarantees. So for example, the Dollar General I'm selling in Chatsworth, Georgia, as we speak, that's a corporate guarantee. That is, if that store doesn't perform or something happens, you've got a guarantee from the other thousands of stores in the nation. Now, that is actually a relocation store, which means that location was at another location in the community and it was relocated here for whatever reason. Usually it's a good thing. And in this case, that store, despite the fact that it just opened under a year ago, in the first quarter of 2021, which was only a few months after opening, they were in the top 5% of all Dollar General stores in the entire region.
Wow.
So, that's a great deal. And we got a great buyer on that and great client of mine that's selling it. It just gives you, an idea. This is a brand new store and it's already destroying the competition.
Wow. That's fantastic. So,
Yep.
and then, going back to this, Dollar General doesn't own all their stores. I mean, they just, or do they have a mix of owned
So they're
real estate?
partnering mostly with developers. So like, let's say you're Dollar General and I'm not a broker, I'm a developer, and we have a relationship, right? We were just on the podcast here and we're talking and you like Birmingham, I like Birmingham. You guys want to open a store there? Well, hey, I'm a developer. I got some land. I'm going to buy the land. I've got, I'll use your plans. I'll do it exactly the colors and the specifications that you want. Do me a favor though. Let's plan it all out in advance. Let's sign a lease. We'll bring in a brokers and help us with the lease. And maybe it's in-house broker that you have at Dollar General. Maybe it's not. And we'll structure the lease. We'll talk about exactly what's going to be expected in the finishes of the property, what the lease terms are, what the rental bumps are, if there are any, what the options are. And then as we get closer, right, to the completion, maybe we're 3 or 6 months away from the rent commencing, then they'll bring in another broker, an investment sales broker, who will go ahead and sell that. So you, Dollar General, never are owning the building in that case. Me, developer, all I'm doing is I'm leveraging my relationship. I'm building the structure, right? I'm getting that lease in place, and then I'm networking with another broker to go ahead and flip it. And these developers, in many cases, they do hold some of them, but in many cases, they're churning, and they're going from property to property. They might be building 5 or 10 of them at a time.
Right. That's intriguing. Just in the sense that they're developing it for Dollar General. Is Dollar General on the hook on those for construction costs and things like that, or who floats the note while they're building?
That's a really good question. So, keep in mind, Dollar General's on the hook from a lease perspective until that lease is over, or until they find a way out of the lease. In terms of the actual construction costs, that can really vary. In many cases, developers will want to bring their own capital. Because they can then, basically their cost of capital might be cheaper than if they would, so to speak, syndicate or use a bank or a group. But in other cases, they may have a lender that they deal with, or they may have, a group of investors that work with them. Now, it's funny because I'm thinking in my head of examples of conversations I've had with some of these developers where they talk about how they actually don't like to use banks for these developments because of, what was the phrase that this one developer would use? Because of the collateral brain damage that he would that he would experience working with the lender. So he prefers to use his investors group and just do it that way. And I'm sure you can relate to that, and myself as well. I'm doing deals all the time, and many times I'd love to use conventional low interest rate, great terms, lending platforms. However, it just becomes simpler and easier and less brain damaging to do things by way of syndication or investing privately.
Right. Yeah. And your speed of execution, I mean, your red tape, the amount of time you spend thinking about things that don't relate to actually getting a building built.
Exactly.
Using financing. I wonder what the cost is to build. I mean, those are block buildings. I mean,
not always are they block buildings, believe it or not.
Really?
Sometimes they're concrete tilt up structures.
Okay.
Those are better.
Right.
Yeah, where they pour it and then tilt it up, or they bring them in. But many times in the case of Dollar General, or even, believe it or not, FedEx's, many times they're metal buildings.
I had no idea.
Yeah.
No idea. That's fascinating.
Yeah, but as a broker and an investor, I'll tell you something. I would rather have a deal or an investment that was a concrete tilt up or a block building than I would a metal one. Right? Now, as a developer, I'd probably rather build a metal one.
Right. Yeah.
Right.
Faster, easier. Yeah, exactly. But a metal one's going to rust, and concrete or tilt wall won't. So that's really fascinating. Let's transition here into, you've talked a little bit about the side of the things that you guys are doing on the resort and the potential, development you guys are going to have up in Traverse Bay. And then we've talked a little bit about dollar stores. What's going to be your blend, or is it always going to be a blend going forward? Because now you've started doing not just the brokerage side, but now you're like, hey, wait, I'm really becoming an active investor as well. So what's that look like moving forward?
Well, and just to clarify, I've been an active investor for most of my adult life. I really got into brokerage through real estate investing. Most of my previous real estate investing experience was just in businesses, but also in terms of, single and multifamily real estate investment in and around the Metro Detroit area. So I would say that, from my perspective, I'm constantly analyzing things. So like I might invest in a Dodge Viper, I might invest in Bitcoin, I might invest in gold, silver, in other, rare and exotic things, I definitely invest in real estate and love it. For me, brokerage is a great business. It's a great way to teach and to give back. And for me, it's a cardiac unit, right? Because it allows me to meet a lot of people, do a lot of deals, add a lot of value. And at the same time, I'm dealing with another lakefront property here in Michigan that one of my trustees who works for me as legal counsel, he had a deal that was a difficult deal and they needed some assistance with, saving a property from foreclosure. I stepped in over the summer, put up some cash, and now, next week I'll be closing on it. So that's just an example of, because I'm in the mix, right. I get access to deals that no one else has. So moving forward for me, I'm going to build this brokerage business. I'm building the training programs, but I'm also building other people's portfolios and my own, right? And I'm building my students' portfolios, and I'm making sure that I'm setting myself, my wife, my kids, my family, and up for success that is independent of what goes on in our market and our economy over the next 5 to 10 years.
Right. That's brilliant. That's brilliant. I love that. I love that. Dan, here, before we jump into the last few questions, is there anything else that you can see, like just talking about the market, timing on the market, or where this, crazy times we're in is going economically? Like, what are you guys doing to position yourselves to protect your assets? There's a lot. I know I've asked like 8 questions, so forgive me, but
yeah, I'm sorry you asked me this because I wasn't going to say it, but now that you asked it, I'm going to say it. I can't sleep so much at night these days because of what's going on in our economy and in the world. Right. And I just want to urge everyone watching this to really take a step back and really think about what's going on. You may see values increasing. You may see the price of cars and lumber and houses going up, but it's before my time, but I've studied it and I understand it. It may or may not be before your time. But rewind all the way to the 70s, so the great era of stagflation, right? Where the market went up, right? But inflation went up way more than the market, and people thought, oh, well, the markets are going up, the economy is doing great. And I'm not knocking on the economy. I love the United States of America. I think it's one of the greatest corporations in the world, and I think that there's incredible opportunity right now. Okay, I say that tongue in cheek, but I really mean it. But what I will tell you is that don't get lost in the buzz and in the noise. Keep your head down, stay focused, stick to your principles and your systems. And when you see something like, I'll give you an example. There's a building I want so bad, but I want it emotionally. Okay. Right. And intellectually and on paper, it might not be a good investment. So I am struggling right now because I have to separate my emotions. So I would tell people, separate your emotions from your intellect, have good advisors and a good team, good brokers, good syndicators that you work with, because what looks real right now, in many cases, is 100% fake. And I know I'm being vague about that intentionally, but what I'll dial it in a little bit and say like this. So if you look at what's going on with interest rates, and you look at the last 10 years of these historically low interest rates, and of, oh, well, interest rates are going up, prices are going to go down, and all these things, none of that has happened. Prices have gone higher, interest rates have gone lower. And there's a widely known fact of what happened over these last 2 years called maybe $10 trillion of money being printed.
Right.
Okay. So when you print, it's supply and demand, basic economics. You print more money, it's going to become less valuable. Why are Dodge Vipers so valuable? I think they're undervalued, but it's because they only ever made 33,000 of them. If one day they decided to make another 10 trillion Vipers, they'd be worth almost nothing. Okay. Right. Same thing with money. So I look at what's going on right now. I look at that cryptocurrency and Bitcoin, and I look at what I think is the resetting of the banking industry, the intentional resetting of the banking industry. And I say, this is the greatest opportunity of anyone's lifetime who's alive right now. And I mean that 100%. So if you're out there and you need help making more money, doing more deals, having more fun, building a bigger business, reach out to us, because that's what we do. We help people with that. And I just urge everyone to not give up and to not fall asleep. Don't even blink. The next, whatever it is, 75, 80, 85 days of this year are going to be probably the most impactful days of anyone's life. And then going into Q1, Q2, Q3 of next year, it's anyone's guess what's going to happen. But I'll tell you that if you position yourself properly right now, you may never have to work a day in your life again.
Right. That's fantastic. Dan, that was awesome. Yeah. Thanks for shedding some light on that and what you see as opportunity. That's sound advice. Appreciate that. Last couple questions here for you. If you could help our listeners avoid one mistake in real estate, what would it be and how would you avoid it?
I mean, touching on what I just said, like keeping the emotions out of it, right? That's a huge, huge thing. And I think that as human beings, we have to be honest with ourselves. And many times it isn't possible to keep our own emotions out of it. I had breakfast this morning with a close friend and colleague, Paul Bensman, speaking about that exact building. And he's the one that pointed out, Dan, I know you're into this. I know you like it. Look at the numbers. So I can do that on my own. I'm pretty disciplined about that. But my circle of influence, my consultants, if you will, I am in constant consultation with my close circle on literally a daily or hourly basis. So I would say that separate the emotions from the intellect and don't rely on yourself to be the one to hold you accountable, right? Make sure you have good friends, family members, colleagues, mentors, all that good stuff that are going to be there to hold you accountable, because, one small mistake could be huge. And, another thing that I'll also mention is just like the soundness of your decisions has to be 100% on as much of the time as possible. My younger brother, Mark, who I love dearly, is on his way over here. We had a conversation last night about some situations with large investors that are, losing their fortunes as we speak. And really everything that we're doing is based on cycles, it's based on principles, and it's based on economics. And what we find is that when someone makes a sound decision over and over again, things work out. When people try to manipulate decisions by padding things or changing things or keeping the balloon going, eventually that balloon pops. And when it pops, because it's not strong, it comes down crashing harder. So I just urge everyone on a micro level to make every decision as soundly as possible and to invest in your circle, invest in people around you, because they're going to by default invest in you then. And therefore you'll be able to make more sound decisions.
Right, man. That's great. That's great. Dan, thank you so much for your time today. If our listeners want to get in touch with you, what is the best way to do that?
So you can definitely check us out. You go to our website, a bunch of websites. I'll try to keep it simple. danontop.com. That's danontop.com. You can send me an email, dan@danontop.com. You can go to our website, creprocourse.com. LinkedIn is always a great place to reach me. Dan Lewkowicz. Last name is Lewkowicz. Again, Lewkowicz. Give out my cell phone number too. If I don't answer, send me a text or shoot me an email. My phone number is 248-943-2838. Again, 248-943-2838. If there's any way we can add value to you, please reach out. We're here to help.
Dan, thanks so much, man. I do appreciate it.
You're the man. Great to speak with you.
You as well.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.